Hey guys, our regular monthly market update from Squirrel. If we start with house prices, because that's kind of interesting, what we've seen and what we've talked about in these updates over the last 6 months is we've seen a big flurry of house listings, and I think we anticipated this would come and it's arrived. What that's doing is it's holding house prices down. You're getting maybe a little bit of an increase, but not as much of an increase as maybe some commentators were expecting, because there's so much supply coming onto the market. We had a lot of people that kind of froze their lives for a couple of years, holding off. Well, they're in the market now, and so there's certainly a lot of properties for sale, and you can expect that to, I guess, give buyers a lot of choice, but also hold back any price increases over the next 12 months or so. There has been a significant increase in population, and eventually that will start to flow through into house prices, but that's not happening just yet. The economy is also really weak, and I'm expecting to see weak GDP data coming out this month for the December quarter. As well as probably another quarter of weak GDP, but we won't be reporting that probably until close to June. The economy is not that strong. Certainly you guys are feeling that. Business owners are feeling that. We ran a podcast last week on how small businesses coping with high interest rates. It'd be fair to say that mortgage delinquencies for business owners are 3 times higher than those on PAYE salaries. And it's simply that they've got a lot more to deal with. You know, they have the same increase in mortgage rates, the same increase in their rates and insurance, but they've got the added complication of higher salary costs coming through their businesses at a time when sales are dropping. We've had 8 consecutive quarters of dropping retail sales in units sold. And I think in the last year it was down 6% on a per capita basis. Which is really, really significant, right? So business is definitely doing it tough out there, which is not great for the wider economy. If we flip over to interest rates, that weak economy is what's going to drive interest rates lower. So it's kind of good news if you're a borrower, but it's not such great news for the economy. Things are definitely weaker out there, and you know, my expectation is that we will see, off the back of weak GDP data, we'll see interest rates or mortgage rates, you know, really starting to fall in the second half of the year. Of course, that's not what the RBNZ is saying. The RBNZ is still saying that the market's too optimistic and it doesn't see rates dropping until the latter part of 2025. I just think that that's what you should expect from the RBNZ until it changes its mind. I'm expecting that later this year. At the moment, the most competitive rates we're seeing are around that 1-year fixed. Banks are competitive at the moment. There's a fair amount of competition out there. I think in large part to Kiwi Bank. You know, the big banks used to be able to ignore them. They can't anymore. You know, Kiwi Bank's become a significant player, and so they certainly influence, you know, price in the market. Best 1-year rates we're seeing at the moment around 6.89 through to 6.99. We're still seeing good cashbacks for those that are in a position to refinance or buying a new property, anywhere up to about 0.8% of the amount borrowed. So worth talking to the team about what the options are out there for you. That's it for us for this month. Talk to you again soon. Cheers.